We hope you've enjoyed our educational video content. Over the last few years, we have created more than 50 short videos dealing with mostly money and finances. To date, the most popular has been the video on the securities-backed line of credit, also known as SBLOC. We have received quite a few inquiries on this subject, particularly from clients who need money to pay taxes or to renovate a house and don't want to liquidate a portion of their portfolio. They are relieved when I remind them that since they've already placed an SBLOC on their account, they don't have to liquidate an investment that could create an additional tax burden. They may have forgotten their SBLOC because it doesn't cost anything until they actually borrow against it. Since we are close to the tax deadline and many are considering home improvement projects, I thought it might be a good idea to re-release the SBLOC video and share a case study that could help evaluate the cost benefits of utilizing an SBLOC. We have certainly gone through some challenging times over the last 20 years. The bursting of the dot-com bubble in 2000, the Great Recession of 2008, and most recently, the pandemic. Severe volatility followed by relatively quick recoveries have taught investors the importance of staying invested. While most people now think twice about moving out of the market when the dark clouds appear overhead, well-designed investment portfolios can be wrecked for reasons other than emotional overreacting. Unexpected life events can require immediate liquidity or cash. Sometimes it's an unforeseen opportunity. Other times it's more like we need to weather the storm in our life, or even clean up on aisle 5, also known as PBS, prior bad stuff. Now when these occasions arise, we can change the conversation from what would this do to our investment plan to here's the amount we can access immediately by setting up what is known as a securities-backed line of credit, SBLOC. If you have a taxable account worth at least $100,000, we can help you establish your SBLOC through one of our money managers. Some of the benefits include financial confidence, by knowing you can access liquidity from your investment portfolio without disrupting your financial plan, and by creating a financial safety net for unexpected needs. It provides financial flexibility by capturing opportunities such as the purchase of real estate or a new business, and repaying the principal at any time. Interest-only payments are due monthly for lines in good standing. Finally, potentially keeping taxes low but not having to sell securities. There's also the ease and convenience. With streamlined online 24/7 access, you can view your loan activity, outstanding balances, and payment schedule. An SBLOC is different from a margin loan in that the proceeds cannot be used to buy additional securities. It is different from a traditional line of credit as there are no annual fees to keep the line open. Generally, the interest rate on SBLOC is lower than a margin loan and a traditional line of credit. However, the interest rate is adjustable and is based upon the 1-month LIBOR rate. Similar to margin loans and lines of credit, there are risks with such transactions that include but are not limited to adjustable interest rates and the effects of market downturn with regard to collateral restrictions or a call for more collateral. Just like applying for other forms of credit or buying insurance, the best time to set up such an arrangement is when you don't need it. To find out more how we can increase your financial flexibility for the future, contact us today to schedule a time to talk.